Hey everyone, my name is Crystal, a CPA at Life Accounting, where we help you to save on taxes and build your wealth. Today, I want to help you do this by helping you to prepare for what some people are calling a future housing market crash. Over the last week, there have been numerous reports of increased foreclosures across the country. And as we all know from the housing market crisis of 2008, foreclosures have a direct impact on the housing market in general. And even crazier, Zillow announced that they have stopped buying houses altogether throughout the remainder of the year. So if you want to learn more about how this affects you, make sure you stick around until the end for all of the details related to this current housing market. And be sure to like and subscribe if you don't want to miss out on future ways to save and make money. Now that pandemic-related mortgage bailouts are starting to end, foreclosure rates are increasing. Specifically, foreclosures in Q3 of 2021 were 67% higher than foreclosures in Q3 of 2020. And there was a 32% increase in foreclosures from Q2 to Q3 this year. That's nearly a third increase. This is largely due to a large number of borrowers exiting mortgage forbearance programs. But being that we are still very much in a pandemic and there are over 7.7 million people unemployed in the United States today, the surge in foreclosures is not too surprising. Yet, mortgage lenders began the foreclosure process on over 25,000 properties in Q3. The states with the largest numbers of new foreclosures were California, Texas, Florida, New York, and Illinois. Now, with this in mind, foreclosure rates compared to pre-pandemic levels are still considered low. When we look at the numbers from 2019, new monthly foreclosure rates were usually around $40,000 per month. And it dropped significantly lower than that once the pandemic started and forbearance programs were in full action. They fell as low as 3,000 to 4,000 foreclosures per month, so to basically nothing. So we went from 40,000 to 4,000 to now 25,000 in monthly foreclosures across the country. But of course, news headlines focus solely on the rate increase and not necessarily the foreclosure numbers overall. Really, what we're experiencing are foreclosure rates going to what we used to consider normal. This could mean really good news to those on the hunt for a house, especially in this housing market. As we all know, home prices have skyrocketed since the pandemic began and has not looked back since. Home prices in some areas have gone up as much as 20%. Which is really high. So you might be asking, if people are foreclosing on their homes, doesn't this mean home prices will drop? After all, lenders just want their mortgage and interest payments, and if homeowners are not providing that, foreclosure is the next step, right? Well, this depends. The only way home prices can drop is if the supply of houses goes up. And we're not necessarily seeing more houses coming on the market. In fact, according to Goldman Sachs, over 750,000 families will face eviction this fall and winter, which could actually cause home prices to go up and supply to further go down. Reason being, landlords are much more likely to raise rents, get new tenants, and hold their properties, which incentivizes even more real estate investors or institutional buyers to buy more properties just to rent out, leaving behind less and less homes available for individuals and families, resulting in higher home prices. However, recently, Zillow has made headlines announcing that they are pausing their home buying activities, which has raised some red flags about if a housing crash is coming. Now, in case you didn't know, Zillow started buying and selling homes in 2018. So you could list your home for sale on Zillow and Zillow would pay you cash for it. But earlier this month, they unexpectedly announced that they would be pausing these activities, claiming that they want to focus on sellers already under contract. Whether or not this is true, Zillow's competitors such as Redfin will continue to make offers and buy homes. With that said, Zillow's sudden pause seems to be related to labor and material shortages as they normally renovate homes to resell. Construction companies are still facing major challenges in these areas, making it difficult for renovation projects to finish. Again, this can only add to the increase of home prices. So, what we're seeing now is very little to no evidence that a housing market crash is coming, at least not in the near future. Instead, what we're witnessing are homeowners actually benefiting from the current housing market and experiencing higher equity in their homes due to increased home values. And banks, as a result of inflation, lending more and more money out at lower interest rates, which only fuels the housing market. Now, if you're one of the millions of Americans who want to buy a home but are waiting for the market to crash, you should understand that although a market crash is always a possibility, it is highly unlikely that one would occur in a similar manner like what happened in 2008. And the reason is because with home prices increasing, and even with foreclosures on the rise, those who are facing defaulting on their mortgage have more options today than they did in 2008. By either just listing their home for sale and having a greater ability to sell their home, or just by staying in the home due to better mortgage repayment options, or by simply changing jobs and experiencing higher reemployment wages. Furthermore, there are still hundreds of thousands of homeowners expected to exit the mortgage forbearance programs through the end of 2021. It is still very possible that a good portion of these individuals will face foreclosure, which could mean more properties available for sale and slowing of home price increases. But this is something you should be aware of and looking out for if you are delaying your home buying to 2022. I hope this housing market update was helpful to you. As always, please leave your questions or thoughts in the comments, and I'll see you in another video.